Oh no, you good. So no, I was just saying that first of all, like this joining this community has literally been probably one of the best things I could have ever did for my crypto journey. And I joined this community and I joined another community and I end up just leaving the other one because it pales into comparison to what you guys are doing here and what we have as a whole here. Listen, yesterday I was on YouTube and yesterday was the first time that I've heard someone outside of this community talk about dark pools, right? And it gave me a sense of pride. I'm like, oh man, like y'all just now talking about dark pools. Like we've been up on this. Like, we've been talking about this.
Well, that's a good place to start off today's call now that we have everybody tapped in. So, Eric, I appreciate that feedback, man. I hope that other people in this community feel that way, and we're just, we're here to help and give
Yes,
people
sir.
realist info. So we're going to go ahead and we're going to get started in today's video breakdown. I want to paint a very clear picture on the market landscape, give you a fundamental overview, go over some XRP and Bitcoin analysis. We're going to talk about what happened over the weekend. I don't really want to do a complete recap of last week. I don't want to beat a dead horse. Just go back and read some of the previous weekend reports that pretty much paint a clear picture on what took place last week. Um, but I do want to get into detail and show you guys how, exactly what Eric had just said, far ahead of the retail crowd we are. And I want to show you guys physical examples just on how lost people are. And it's very sad that people are not taking a mature approach to learn the markets better in which they trade and invest in. And they're really only basing their analysis and their insights and their trade decisions off of YouTube and Twitter. And it's really, really sad. People are going to continue to get decimated. And you guys in this community have such an upper hand. So we're going to just start off with showing you guys, exactly what Eric's talking about, these dark pools, okay? We had these levels specifically just looking at XRP, okay? May 5th, 2025 in the XRP analysis Discord. Hopefully you can see my screen, correct?
Yes, sir.
Okay, sweet, right? So here are the dark pool prices from May 5th that Scalper was giving you all. And this is back when XRP was trading at about $2.09 before we rejected the buy dark pool delta and price rallied all the way to 63 cents, right? So we had these levels over a week in advance, which just goes to show how accurate our programs and our algorithms are that are tracking these dark pools for you all. Because now, fast forward just the other day, this was my Sunday weekly update. I'm giving the general public one update at the beginning of every single week on Sunday, giving them a full look into our private community as to what we offer, fundamentals and technical analysis analytics. And you can see here, I delivered the bullish targets of the $62.63 area of interest on XRP or the next sell dark pool. And this is yesterday when XRP was trading at about $2.35. So again, just trying to show the general public that we have access to information before it plays out, both in terms of fundamentals and in terms of technical analysis. So let's cover our detailed report from today. I will make sure to drop this in the chat for you all after we get thoroughly through this. But not only do I want to show you guys that I deliver fundamentals to you all that make sense and that the rest of the retail crowd is not paying attention to, but that the retail crowd is disoriented and they are so manipulated because of price predictions, because of people on Twitter that have thousands of followers that don't have any idea what they're talking about, and they're literally just battling themselves at this point. So just check this out. I blocked out these people's names on Twitter to save them embarrassment in case I upload this publicly, because I'm not here to attack anybody. I'm just here to prove that here at CYPRX, we are 10,000 steps ahead of the average retail crowd. So here is an influencer with thousands of followers, and they went on to say XRP to the moon. Oh, never mind. Again, dot, 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 right? And I'm assuming that they got all hypey because XRP's price was pumping and then boom, it reversed. Well, again, here at CyberX, we already knew those areas in advance where it would most likely reverse from, i.e., the dark pools. And then here you see another influencer, again, just blocking out their name, not here to attack anybody. Um, they said here, XRP, what's the news, right? And look at the screenshot. This is exactly when XRP was trading at $2.63. Interestingly enough, I just find that absolutely hilarious, right? So, just goes to show here in this community that when you're reading our fundamental reports, when you're staying engaged, when you're paying attention to the deltas and you're updating your charts and you're actively engaged in what it is that we offer, you're 10,000 steps of most people in this space, right? So let's get through this. Let's talk about what took place and why the markets are actually slightly down today. As you can see, if we just go and look at the total cryptocurrency market cap, give me a second. I hope my mouse didn't die. Nope. All right. So today at 9:16 a.m., we actually had a slight market reversal. And in yesterday's news fundamental report, I talked about in this section where we were talking about tariffs. This is, by the way, May 11th's fundamental breakdown. Again, just trying to show you guys, I thoroughly explained fundamentals in advance. Well, in this section here where I was talking about tariffs, I specifically started to talk about how the fundamentals over the weekend could turn into a buy the rumor, sell the news event. You can see here it says markets have already priced in the optimism from the China US tariff announcements. Yet it remains little more than a rumor without concrete evidence of draft timetables, tariff rollback schedules, or even joint statements. This risk is a classic buy the rumor, sell the news reversal. And so today, again, we see the euphoria amongst retail investors. Give me a second. I don't know why my mouse is tripping right now. There we go. Um, please don't die on me. I know I charged you. There we go. So we can see, the euphoria. Everybody's like, oh, to the moon, never mind. And just here in this community, I try to keep you guys thoroughly updated with accurate information. So let's talk about why this slightly turned into a buy the rumor over the weekend and sell the news event today during Monday, once, trading started to commence and the markets open. Obviously, of course, crypto doesn't close, but, when large market participants coming in Monday that only trade Monday through Friday started placing their bets in the market. So then after that, towards the end of this, stick around for the entirety of this. We're going to go over the trajectory for tomorrow because we do have important inflation data. So we'll go over if-then scenarios. We'll cover the risk premium and the risk discounted opportunities that we could see tomorrow and just go over a price analysis towards the end of this. So let's break this down. What has happened? May 12th, 2025, crypto carried last week's bullish momentum into the weekend after Washington and Beijing announced a 90-day tariff pause. Headline rates look friendlier. US duties dropped to 30% from 145%, China's to 10% from 125%, but the substance still remains harsh. Every levy imposed before April 2nd still stands in the market today, from electric vehicles and solar panels to semiconductors, steel, and aluminum. De-minimized exemptions are still gone. Beijing's restrictions on critical minerals linger, and its company-specific reprisals remain untouched. This is not a breakthrough, it is a timeout, and that is something that we in this community have to understand. Everybody else in the retail crowd was getting extremely euphoric, which this is a positive shift in momentum compared to what we've seen previously, but it is not solidification. It still delivers a certain degree of uncertainty, and we have to understand that and not marry a bias, right? People have to understand that greed works in both directions. When prices are going up, people want higher prices. When prices are going down, people always want prices to come lower. This temporary deal and temporary deals in the past have crumbled. With no structural sticking points addressed, the clock is already ticking toward mid-August, exactly when election rhetoric typically peaks. Markets sense the fragility. President Trump also announced that the EU is nastier than China, and that erased early gains and underscored how fast the sentiment can sour. And I gave you guys a little screenshot here. Look at the time. This is 9:16 a.m. when we saw a massive liquidation event today in crypto. Pretty much all the investors today during New York session took out all the leverage buy positions you can see that rested underneath of London position traders and Asia session traders, right? So over pretty much the last 24 hours, most of the leverage underneath of those areas of interest has been liquidated. And interestingly enough, if we go and we look, right, we go and we look at the time that this tweet came out, it came out at exactly 9:16 a.m. And so if you go into yesterday's report, I had warned you guys yesterday, right here in advance, just, again, I'm trying to show you all that not only in terms of technical analysis with the deltas, but in terms of fundamentals, if you pay attention and you read these things, you will know what is happening in the market, and you will not be confused like these retail investors. Well, it says right here in yesterday's May 11th report, I said the European track remains quiet for now, but silence is hardly reassurance. Brussels has already threatened retaliatory levies if its own negotiations stall. So I mentioned to you all, if anything happens on the EU rhetoric right here, look, it says EU rhetoric, a single threat or tit for tat duties is enough to flip the market mood from optimism to defense right there, right? And this was in yesterday's report. So again, if you're tracking these things, nobody should be confused because all it took for you today was to read a simple headline to see that Trump was, talking, not talking crap, talking smack about EU, but delivering some degree of uncertainty. And we know that right now we are in an extremely headline driven trading environment. If you all remember in a Zoom call, just maybe like 3 or 4 days ago, one of our community members, Lisa, asked the question, um, I don't remember specifically what the question was, but it led us into a conversation on how we are in a trading environment. We are not in a utility environment. And so we need to understand that any of these headlines driving risk on or risk off optimism need to be taken exactly as such. We need to be reactive to these things and not just think that the market's going to go up for forever. And today was a prime example of that. Moving on. So that was one thing I wanted to show to you guys. Monetary officials also added to the caution. Fed Governor Adriana Kugler reiterated Chair Powell's hawkish tone from last week, warning that tariffs slow growth and could keep inflation. Sorry, excuse me. Warning that tariffs could slow growth and could keep inflation stubborn. I'll go in and I'll fix that because when Father Woody reads this, I want to make sure it's crisp for you guys. Continuing this, it says her verdict policy is well positioned, signals rates could stay higher for longer. We know that that terminology usually tends to reflect itself in negative intraday price action in crypto. Treasury Secretary Scott Bessent also framed the truce as another milestone in strategic decouplings. The U.S. imported $440 billion of Chinese goods in 2024. That pipeline is now being redesigned for national security resiliency over cheap efficiency. Baseline 10% tariffs and a 20% fentanyl surcharge are permanent. Crypto's total market cap still hovers near $3.27 trillion, but today's intraday reversal highlights how quickly buy the rumor can flip to sell the news, which we warned ahead of time during yesterday's report. Here's a screenshot of that, just trying to show you guys, keeping you all on your toes. With neither trade nor monetary policy offering clarity, traders are on standby awaiting tomorrow's US inflation data. And so in the reports that I read today, you can see some of those deliverable key vocabulary words that I try to teach you guys to pay attention to. If you ever see the terms like risk off, uncertainty, fear, what's another one? Higher inflation, higher for longer interest rate environment, things of that nature, right? Those are all words that tend to weigh intraday on risk assets. And you can see right here in one of the fundamental reports, it says, for another, a 90-day suspension leaves great uncertainty in place. So on one side of the spectrum, you have retail participants, right, expecting a massive bullish appreciation. I mean, you guys can go look, type it in on Twitter, just type in XRP in the search bar, and you will see so many bullish technical analytics. XRP to the moon, XRP to $3 tomorrow, da 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 da. But yet here we are stalled on XRP at $2.63, which were areas of interest that we were given to you guys all the way back when price was at $2.09, literally trading from delta to delta, right? Now, after maybe having taken some profit, you can reposition yourself, do a re-analysis of the markets, whether the market mood is going to continue to sour further or continue to drive optimism, break out above $2.63 to reposition yourself at a retest for possible higher prices, or secure your profits and reallocate back down at lower delta zones. That is the power of this community. Not marrying a bias and just expecting off of hopium and nothing in the market for prices to do what you want them to do. All right. So let's kind of shift gears and let's thoroughly go over tomorrow's inflation data so that way everybody has a clear understanding. One thing that I want to convey, regardless of what usual effects higher or lower inflation tend to have on global markets, particularly in this case, risk assets, we need to take into consideration that tariff and geopolitical headlines have been the predominant driver of sentiment. So certain scenarios that we might walk through right now, considering the inflationary environment, might not have the normal effect that we usually see and have seen in past market conditions because of the tariff uncertainty or the deliverable announcements surrounding geopolitical tensions that could sway the market sentiment at any moment in time. So I've incorporated that into this report, but just keep that on the back burner in your thought process tomorrow as you go into the markets. All right. So a softer print overall would revive rate cut hopes and extend the risk on bid. An upside surprise, inversely, would compound tariff-driven price pressures and invite another bout of volatility. The market's projections right now for the upcoming inflation data have significant implications for risk assets, and it's crucial to understand the potential scenarios depending on whether the data signals disinflation or persistent inflation. So here is an analysis of the likely impact of the inflation data due tomorrow on the market, particularly on risk assets like equities and cryptocurrencies. So in blue, again, to stimulate that dopamine, blue usually tends to mean bullish or upside potential. So if inflation data comes out lower or we see any signs of disinflation, here is the painted scenario. So right now the consensus tomorrow for the inflation rate year over year is at 2.5%. That means ideally for this scenario to unfold, we would like to see something at 2.5% or below. The consensus for the month over month rate is at 0.2%. Same thing. Ideally, we would like to see the figure come out at 0.2% or below at 0.1%. And then CPI month over month. Right now, the consensus is at 0.3%. I would ideally like to see it in negative territory at negative 0.1%, but that's reaching in my personal opinion. So anything below 0.3% could also feed into this narrative. The interpretation. A lower than expected inflation print suggests disinflationary pressures, indicating a cooling of inflation from the prior months. This would most likely be interpreted as a positive signal for the economy, as it indicates that inflationary pressures are easing. The market might start to price in that the Fed may now be more inclined to consider a more dovish policy stance as inflation risks appear to be contained or fading, thus increasing the odds of a rate cut or a pause in rate hikes. If we see disinflationary pressures tomorrow, that could also go against what both Fed Chair Jerome Powell said last week and what Fed Kugler said today, that inflationary pressures still remain skewed and risky to the upside. However, keep in mind, as I mentioned, if tariff uncertainty or negative geopolitical headlines linger, this could weigh on risk assets, and the normal effect of lower inflation supporting risk assets may be challenged. So tomorrow, even if we see lower inflation and we see a spike in liquidity to the upside and bullish momentum in risk assets, an hour later, we could see some type of major tariff announcement or geopolitical shock that completely flips the script. So just be on your toes. All right. The overall market impact that this will most likely have, however, disinflationary data would likely spark a risk-on sentiment intraday across financial markets. Investors would expect the Fed to cut rates sooner than previously anticipated. That means that we would see the CME Fed Watch Tool rate cut probability most likely increase to some degree, or at least signal that inflation risks are under control. This would most likely support equities and high beta assets like crypto, which often perform well when risk appetite is high. The US dollar, on the inverse side of things, would likely weaken as rate cut bets increase, diminishing the appeal of holding US dollar denominated assets. Again, just warning you all that if we do see tariff uncertainty or negative geopolitical headlines tomorrow, that could weigh on risk assets, and the normal effect of lower inflation supporting risk assets might again be challenged. All right. So let's just pause right there. If we do see lower inflation readings tomorrow, what am I looking at in terms of XRP technical analysis and Bitcoin technical analysis since we're on the risk on topic? For now, I'm looking at this most recent A to B move on XRP, holding weight into tomorrow's CPI report in order for us to see a sustainable bullish move to the upside again on XRP. So that would come in the form of a retracement down into $2.30 for buyers to come in, defend their previous positions, and send price back to the upside. So this would be trade idea or scenario number one. Scenario number two would be a medium retracement back down to $2.47 for, again, buyers to defend their positions, reaccumulate orders, and send prices back to the upside. I don't see scenario number three as of right now playing out, but that would be Price is turning around from where we currently stand, breaking above $2.63, retesting, and making our way up into that $2.76 range. This thesis would be invalidated if we break below $2.30 and the market sentiment sours or worsens, which we'll go over in just a second when we flip the script, right? Give me just a second. Let me mute you all. Here's some background noise. All right. As for Bitcoin, same thing. What you'll notice is that all price action across the board primarily today pretty much took a hit, showing you guys across the board that this buy the rumor over the weekend, sell the news when the Monday open took place is happening across pretty much all risk assets, give or take a handful of a few altcoins that are still kind of doing its thing, right? So Bitcoin, same thing. Looking at these trade ideas right now, I am paying attention to these buy volume areas and any reversal price action or buyers defending that we could see come into fruition, which I let you guys know in the Bitcoin analysis section this rising. But pretty much the same thing on XRP. Last line of defense here for me on Bitcoin is the $99,400 threshold. So bullish scenario number one, the best and most ideal scenario for us as retail investors looking for a good weighted risk to reward for intraday positions would be for us to see a discounted move during Asia and London session. Buyers coming in at $99,400, defending their positions and sending price back to the upside. Scenario number two, some type of reaccumulation in these buy volume areas for price to again flip bullish back to the upside. And I think that I just leave it there. I don't see prices reversing from where we currently stand. Maybe some lower prices or maybe a breakout from where we sit right now at about 102,600 to see higher prices. But these would be the two bullish scenarios that I'd be looking for on Bitcoin. Just like on XRP, that $2.30 threshold, $99,400 is our last line of defense. If we break $99,400, I'm expecting a deeper correction on Bitcoin, which again, we'll get into in just one second. All right. Inversely, if the inflation data tomorrow comes out higher, showing sticky and troublesome inflation, again, anything above consensus or above previous readings on any of these inflationary metrics tomorrow that we get or that we see is most likely going to see this type of result in terms of price action. So the overall interpretation, a higher than expected inflation print would reinforce concerns that inflation is more persistent and less responsive to the Fed's tightening policies. The market would interpret this as a signal that inflation risks remain skewed to the upside, which would solidify exactly what Jerome Powell has said recently, along with other Fed speakers, keeping the pressure on the Federal Reserve to maintain its current rates or even possibly hint at interest rate hikes to keep inflation in check, which I don't think is on the table right now, but still something that the market could start to price in. The chances of a more aggressive Fed stance would rise, potentially putting off any rate cuts for the foreseeable future. Right now, the market's pricing in about 2 to 3 rate cuts this year. If we see higher inflation this week, both in the CPI and PPI readings, then it's most likely going to dial those expectations back. We're going to see that the market got ahead of itself yet again, pricing that info in, and we're going to start to see some aggressive profit taking. So, market impact, risk assets. Sentiment would likely follow. Higher inflation would reduce expectations of rate cuts, and instead, the market could price in prolonged higher rates or even potential further hikes. This would weigh on risk assets most likely, particularly equities and more volatile assets like cryptocurrencies. I'm not saying that this would completely diminish the overall bullish trajectory, but remember, pretty much since the 7th of April, price action on crypto has been going up, right? Give or take a few altcoins that haven't really experienced any significant price appreciation yet. I'm looking at the majors, Bitcoin, Ethereum, the total cryptocurrency market cap as a whole. If you go back and you look since the first week of April, the total cryptocurrency market cap has pretty much been going up. So is it unrealistic for us to see a correction while still maintaining the overall bullish optimistic outlook throughout the remainder of this year? No, it's not. So if we do see a correction this week due to these types of headlines or these news events, don't be fearful. It's healthy, in my personal opinion, for us to see a correction where we currently stand, right? The US dollar would likely strengthen as higher inflation raises the odds of continued Fed tightening or higher for longer rate environment, making the US dollar denominated assets more attractive, temporarily, of course. So in summary, To just, oh, sorry, excuse me, before I get into the summary, let's just talk about the price trajectory. All right. So if we do see inflation skewed to the upside tomorrow, weighing on Fed rate cut bets and enforcing the policy stance and the kind of economic environment that Fed speakers have recently delivered and Jerome Powell, where they've mentioned that, economic deterioration remains on the forefront as a possibility, coupled with higher inflation feeding into that stagflation narrative. In terms of Bitcoin price action, we're most likely going to see a failure for Bitcoin to break higher. Keeping in mind that the market environment is still bullish, we could see a move where prices come, liquidate these over-leveraged sellers or anybody here, buyers attempting to break sellers again, but then sellers defending and pushing prices lower. Or we could see a move lower from where we currently stand. Again, the last resort here would be for us to see a break of 99,400. If we do see a break of 99,400 and buyers failing to defend their previous positions, it's going to open the door for lower prices. The next dark pool comes in at 97,400. Anything below that opens the door for a full-on correction of this entire previous bullish move, which I personally don't see happening. But that would open the door for lower prices of around $93,000 to $90,000 per Bitcoin. As for XRP, failure to see buyers overpower sellers at $2.63. Sellers showing their hand, defending their prices. This would be something that we could possibly see on XRP rolling into tomorrow. Sellers pushing price action back down into the $2.47 range to possibly $2.30. I would not be fearful of a further market correction unless we see $2.30 broken. Buyers failing to push prices higher above the sell deltas, sellers overpowering, keeping price below the deltas would most likely open the door for $2.09, or a revisitation and a full-on correction of this previous bullish move. If at any point in time we were to break $2.09, that would be my last area of interest where I would say, okay, I'm going to wait, sit on my hands, and see if we can see anything below $2. That would open the door for $1.99 to possibly $1.78. But we'll get there when we get there. Right now, the $2.30 threshold is our main bearish target if the sentiment sours or worsens from where we currently stand. Right? So to wrap this up and put it in a nutshell for you guys, if inflation is lower than expected, meaning we see disinflationary data tomorrow, it's most likely going to support risk assets. The Fed policy expectation is that we're going to see a higher rate cut probability and the market price in possible dovish Fed commentary because we do have Fed speakers throughout the remainder of this week. We're going to see a weak intraday US dollar, but we still need to be mindful that tariff news will win the overall sentiment for the day. Inversely, if inflation is higher than expected, meaning we see sticky and troublesome inflation, risk assets intraday will most likely flip bearish or see sell pressure. We're going to see the market start to price in a higher for longer interest rate environment. We can also most likely assume that we will see hawkish Fed speakers throughout the remainder of this week. We will probably see strengthening intraday in the US dollar. And again, just be mindful that even if we did see higher inflation inversely, just like the bullish scenario for crypto, we could see higher inflation, but then we could come out and see a whole bunch of positive sentiment surrounding geopolitical tensions. We could see a whole bunch of announcements on the tariff front that drive market optimism, and we could see that outweighed. So just be mindful the tariff and geopolitical news headlines will overweigh any sentiment that is delivered by data intraday, in my personal opinion. Just taking a look back at the market movements over the past 5 months, tariff-driven headlines and geopolitical shocks have been predominantly driving market sentiment intraday over data. All right. So that is the wrap up in a nutshell, but also keep in mind that these catalysts that I delivered for you guys as well still remain in play. So we have a whole bunch of geopolitics and headlines that we need to be mindful of, right? Russia on the forefront, I believe, if I'm not mistaken, going in tomorrow on May 13th. I believe I just don't remember the dates off the top of my head, but there's some type of ceasefire talk that's set to take place. The U.S. and Iran's nuclear talks that are set to take place this week as well. Don't forget that Israel has not commenced to their attack on Gaza yet. That's still possibly lingering. So all of these things that I talked about, guys and gals, in the previous report still matter. So make sure that you understand these as well in case they unfold this week. All right. But to wrap all this up in a nutshell, okay, just trying to show you guys that here in this community, we keep you ahead of the curve, whether it's fundamentals, whether it's technical analysis. Make sure that you guys are watching the Zoom call recordings, reading these reports, and updating your charts every single day in this community. All right. So outside of that, that's all I have for you guys today. I'll leave the floor open for questions and general commentary. But yeah, pretty solid breakdown, pretty solid fundamental report, pretty straightforward across the board. We're kind of just waiting, sitting on our hands for tomorrow's impactful data and headlines. Outside of that, I'll let the floor open for you guys if you have any questions.